DEI folks would try to tell you that what you see in the picture here is a room full of Asians. But the truth is we don't know anything about these people. They could be BBCs, British-born Chinese. They could be ABCs, American-born Chinese. The fact of the matter is that close to 60% of the world's population hails from Asia, and it's a massive place. So we're going to talk about that a bit. We're going to take a look at what a super app looks like. We're going to talk about what Grab does. We're going to look at Grab versus Uber. We're going to talk a little bit about Grab's leadership, and I promise you this is going to be a very interesting presentation. So I love this quote. It says, "Sell to the rich, live with the poor. Sell to the poor, live with the rich." And there's a lot of money to be made selling into particular regions in Asia. So here you can see Southeastern Asia. So that table in the upper left there shows Asia, 4.7 billion people. And then Asia's broken down into all these categories. So you want to put a checkbox that says Asian, you better elaborate on that a little bit more. So right now I'm traveling in Central Asia, and I'll have visited all these countries probably by next month. And Southeastern Asia, I've also been to all these places. They contain, these countries you see here circled in red, 690 million people. So that's more than South America, which has 422 million, and the EU, which has 448 million. So it's a very large region. Now, when we think about investing in Asia, it's typically India and China. These have more than 1 billion people each, lots of opportunity. Investigating India's on our to-do list, and China has this VI structure issue that we've researched quite extensively. Now, what you need to note is that business models which enjoy a success in developed markets, they won't always be successful in emerging markets, and they'll also be quite lagged. So Uber is an example of a business that hasn't necessarily been successful in certain emerging markets. You have companies like Yandex, which I use right now in the region that I'm in, and of course Bolt and others. Now, I spent 2 months in Indonesia visiting with their top AI startups. This was back in 2019. And what I found was that I think it was a third to half of them were AI-based language models focused on Bahasa Indonesian, which is that language. And IBM was actually poking around. They're interested in what they were doing because nobody had actually looked at providing language translation services for a country with upwards of 270 million people. So when I was investigating AI startups, that's when I learned about Grab and Gojek, and I took this picture here of these two drivers. They moonlight for both companies. They'll switch jackets and helmets and do the work. They're mercenaries. And here you could see in the upper right a survey that was done by a firm in Singapore called Black Box, and it shows that Grab's edging out over Gojek there with a 55% market share and Gojek at 40%. This is based on a survey of 492 people, so I take that with a grain of salt, but it probably reflects close to reality. The first time I went to Indo, I used Bluebird, and look, they're being pushed into irrelevance. Now, the players in our story today are going to be Uber. So they do ride sharing, of course, and delivery, or ride hailing to be more specific. Grab does mobility, ride sharing, hailing. Delivery, mainly food. And then you have WeChat. That's a true super app platform. And I think one of the reasons for that is because it's also a social media platform. Then you have Didi, which is China's Uber, and they actually have an app on WeChat. So what does a super app look like? Well, WeChat is essentially the home screen for many Chinese smartphone users. It has almost every function that you can think of can be completed from inside the app. So they have 1.33 billion users, so almost all of those people are based in China. Almost every smartphone user in the country already has a WeChat account, so their growth is understandably slowing. Now, it originally functioned as a simple messenger app, so you can think of like the WhatsApp of China, but now it's a lot more, and some of the more popular, most popular applications in China, like Pinduoduo, JD, Didi, these all have mini programs on WeChat, and then Tencent, they're the company that owns WeChat, they take a small slice from each of these mini programs and also provide the payments platform, so like a wallet, which is critical to their success. Now, this piece by Andreessen is a bit old, but it's very good. It says, when one app rules them all, the case of WeChat and mobile in China, and you ought to give that a read. It's a little bit verbose, but there's a lot of rich information. We've done that for you here. So WeChat is actually more of a portal, a platform, even a mobile operating system. And the reason why we care about it, it points to where Facebook and other messaging apps could head. It indicates where the future of mobile commerce might be, and it shows what it's like to have a platform and a mobile portal. So it's what Yahoo could have been. Now, their average revenue per user is estimated to be at least $7 or 7 times the acronym is ARPU of WhatsApp, which is the largest messaging platform in the world. So they're able to get a lot of revenue from their users. How do they do that? By offering more functionality. So Chinese apps tend to combine as many features as possible into one application. And there's millions, not just thousands, millions of lightweight apps that live inside WeChat, much like web pages live on the internet. And the Trojan horse here is their WeChat wallet. Now, what does Grab do? Well, they operate in 3 areas. We're trying to answer the question, is Grab a super app? Well, they certainly have the potential to be one. So we start with mobility. That's the more mature segment because that's where they started. You see Grab car, Grab taxi, Grab bike, etc. Then you have this deliveries segment. So Grab food, that's just food delivery. Grab kitchen, where they tried to do this ghost kitchen concept. I think they're pulling out of that. Grab Mart for ordering goods and delivery service. Grab supermarket, so they actually operate 48 supermarkets in Malaysia that they acquired. They say that online grocery in Southeast Asia is a $17 billion opportunity. So one of the things we want to do also today is look at the total addressable market and how much expansion Grab has left. We think it happens to be a lot. Then you have Grab Express, this package delivery booking service, and then the fintech component. That's critical if they want to become a super app. You have Grab Pay, Grab Rewards, Grab Finance. These are pretty intuitive. Pay later. Interesting. Grab Insure, Grab Invest. 70% of Southeast Asia is underbanked. That means they don't rely primarily on traditional banks. So there's a huge opportunity there. Now, is Grab a super app? Well, first of all, it's missing social elements. So that, I think, is what makes WeChat unique, because their users spend 82 minutes a day on the app. Here at Nanalyze, we're trying to monetize our own video and written content in their ecosystem, and we have to do that because it's very hard to get there, to get viewers from China to leave that ecosystem, so we're having to monetize within it. Each geography that they operate in, we're going to talk about where those are going to have competitors across all these possible niches. So it's a question of, do you build or do you take a cut from someone else's success story? And Black Box says here, it's really Grab's game to lose. So there's a lot of opportunity. Now, when we look at Uber, this is a piece we did recently on Uber's revenue breakdown, and I only wanted to point out several things here. First of all, the revenue segments that you see above are similar to the segments for Grab, but see how Asia Pacific is declining as a percentage of Uber's total revenues? Well, Grab and Uber used to compete heavily in Southeast Asia for about 5 years, until March of 2018, when Grab acquired Uber's regional business in exchange for Grab shares. I think Uber owns around 14% of Grab. So that's interesting to note, that they don't have to compete with Uber. Now, when we look at Uber versus Grab, we see similar segments here. Look at the table on the bottom. So that's Grab. And we notice here deliveries, okay, a lot of growth there. You see that strong growth. Mobility, not so much growth from year on year. That's because it's the more mature segment. Then you have financial services, lots of growth there. Enterprise and new initiatives. So this includes ads and maps. So we're going to do another piece, and we're going to take a look at their 2023 results and dig a lot deeper into the company. But here you can see, this is Uber's ownership in Grab, as I mentioned, around 14%. Now, some basic numbers for Grab: their market cap, $12.55 billion. Estimated 2023 revenues of $2.2 billion. So they have a simple valuation ratio of 5, which is in line with our catalog average. They did a SPAC. Honestly, so far, this might be one of the most promising SPACs I've looked at. Crappy returns, of course. They all, SPACs just crapped out across the board. We did a recent piece on that. 68% down. Of course, that's a buying opportunity if it's a great company. That's the question, right? So they reached positive operating cash flows last quarter. They have $4 billion cash net. Gross margins are very deceptive, and I think that's because of their incentive structure. We're going to talk about that. See how those gross margins, this is quarterly. Look at how they're increasing. I suspect that's because they're pulling back on their incentives. Now, I wanted to talk real quick about leadership, and here you can see this great diagram from Black Box. They did surveys across all these countries and looked at Grab's leadership. Look at how they're dominating in the countries that they operate in. That's quite remarkable, right? Indonesia, Malaysia, Philippines, Singapore, Thailand, Vietnam. So they're doing a great job in ride-hailing leadership. When it comes to food delivery leadership, that also happens to be the case. You can see Grab ahead of Food Panda there and Gojek. Now, here's the total addressable market. Now, I started out with population. You can see that on the left. So we have what? Around 603 million people we're talking about. But the true population would be the smartphone users. So we've taken this table and looked at that. And then I've taken the percentages you see to the right of that table. It's percentages of the population that has a smartphone. And look at where Grab has been dominating there in their revenues. Lower right table there. So Malaysia's their biggest country that they operate in, with 503, or just over a third of all revenues coming from there. Malaysia also happens to have 74% smartphone penetration. Then it's Singapore at 300 million, Singapore 83%. So it seems like they've picked the countries there with the highest smartphone penetration. Then, of course, there's Indonesia, Philippines, and Thailand. You can see the revenue breakdowns here. But the 36 million monthly users that Grab has, that's about 11% penetration of the Southeast Asia smartphone user opportunity. Now, I wanted to touch quickly on customer acquisition costs. This is something we're going to need to dig into. You see here in 2022, they spent $2 billion in what they call incentives. These are for customers and for the business side. So that needs to be delved into, because when I was in Indonesia, I remember going to restaurants and they would give you a $10, I think it was something like a US $10 credit, just to use a payment app at that restaurant. And it was a race to the bottom where the payments company with the most cash was gonna be able to continue doing that, and the other one was just gonna go bust. And it's not the first time that's happened. So you really want to pay attention to that. Spending $1 to get 75 cents in revenues. I also noted that cash paid trips are on a significant decline, and that may point to the success of their wallet or their wallet equivalent. We'll want to look at that. And here I've just pointed to the incentives. You can see here's a breakdown of what a transaction looks like. And you can see that once they get to the GMV, so that's the total amount of revenue under consideration, then they take their commissions. They're $5. You see that? Then look, partner incentives, $2. Consumer incentives, $2. They've already taken away 4/5 and given it to other people, and it leaves them with $1 in revenue. If they didn't do that, they'd make a lot more revenue. So we really are going to need to analyze that in part 2 of this presentation, where we'll analyze Grab's 10K. I think we'll wait for the 2023 10K to do that. We're going to focus on finding red flags and showstoppers. We want to better understand the incentive structure. And the question here, could we find love in Southeast Asia? Maybe. I certainly like what I see of this company so far, but it needs a lot more digging. Now, we love bears, so we want to hear you chime in with all the reasons you think investing in Grab is a horrible idea. And after watching this, you may find another presentation we did on Uber versus Lyft. It's interesting. There's some interesting bits in there that you'll find, so give that a watch. Make sure to subscribe to our channel so you don't miss that coming video on Grab. Thanks so much for taking the time to watch this today.